Commercial property classification and tax obligations in Singapore. 1. Classification of commercial properties in Singapore. Commercial properties in Singapore are categorized based on their usage and zoning regulations set by the Urban Redevelopment Authority, URA. The primary types of commercial properties include A. Office spaces. Office buildings are typically classified into Grade A, B, and C categories based on their location, building quality, and amenities. These offices are mainly used by businesses for administrative and corporate functions. Prime office spaces are located in the Central Business District, CBD, while more affordable options exist in decentralized business hubs. B. Retail spaces, shophouses and shopping malls. Retail properties include units in shopping malls, standalone commercial buildings, and conservation shophouses. These spaces are used for retail shops, food and beverage, F&B, outlets, and service businesses. Shophouses often have mixed-use components, with retail on the ground floor and residential or office spaces on upper levels. C. Industrial commercial hybrid spaces, B1 and B2 industrial with commercial use. Some industrial properties allow a mix of industrial and commercial activities. Business 1, B1, spaces are designated for clean industrial use with limited commercial functions, while Business 2, B2, spaces are meant for heavier industrial activities. D. Hotels and service departments. Commercial properties in the hospitality sector include hotels, service departments, and hostels. These properties require government approval for short-term accommodation and must comply with hotel licensing regulations. E. Medical suites and healthcare spaces. These commercial properties are located in hospitals, medical centers, or specialized healthcare buildings. They cater to medical professionals such as doctors, dentists, and specialists providing outpatient services. F. Commercial mixed-use developments. These properties combine office, retail, and sometimes residential spaces within a single development. Examples include integrated developments like Marina One, Paya Lebar Quarter, and Suntec City. 2. Tax obligations for buyers and investors. Investors purchasing commercial properties in Singapore must be aware of various taxes and duties payable during and after the transaction. A. Buyer's stamp duty, BSD. BSD is imposed on all property transactions, including commercial properties, and is calculated as follows. 1% on the first SGD 180,000. 2% on the next SGD 180,000. 3% on the next SGD 640,000. 4% on the remaining amount above SGD 1 million. Unlike residential properties, commercial properties are not subject to additional buyer's stamp duty, ABSD, making them attractive to investors. B. Goods and Services Tax, GST. If the seller of the commercial property is a GST-registered entity, the buyer must pay a 9% GST, as of 2024, on the purchase price. However, GST-registered buyers, such as businesses, can claim this amount as input tax. C. Property tax. Property tax for commercial properties is set at a flat rate of 10% of the annual value, AV. The AV is assessed by the Inland Revenue Authority of Singapore, IRAS, based on the estimated rental income of the property. D. Corporate and personal income tax on rental income. If the property is owned by a company, rental income is taxed at the corporate tax rate of 17%. If the property is owned by an individual, rental income is subject to personal income tax, ranging from 0% to 24%, depending on the individual's tax bracket. 3. Conclusion. Singapore's commercial property market offers diverse investment opportunities across office spaces, retail units, industrial commercial hybrids, hotels, and healthcare facilities. Investors must consider various taxes, including BST, GST, property tax, and rental income tax, to make informed financial decisions. Proper financial planning and understanding of regulatory obligations are essential for maximizing returns in the commercial real estate sector.